Hello, chart watchers and Decision Point faithful. I am Erin Swenlin from decisionpoint.com, and this is your Daily Five. I'm going to show you five charts that I think are really interesting right now. And sadly, today, I think it's going to be going to be a little depressing. First, though, before we get started, I wanted to remind everybody that I do a free trading room every Monday at noon. It's free. It's free. So just go to decisionpoint.com. You will see a similar ad right here with a register now. Just go ahead and click on that. It's recurring, so you only have to register once. And then hopefully I will see you every Monday in the free trading room. All right. So I decided to call today, look out below, nothing is safe. That's pretty much the case across the board. At least the last couple of trading days, we've had pretty much none of the sectors have been ending positive. And it's just getting more and more ugly out there as we lose more and more support levels. So I'm going to concentrate today on the SPY, and then I'm going to talk about gold and crude oil, which have been, gold is sort of the hideout. Well, not so much now. And crude oil has been kind of the Teflon of all of them, of all the stocks and ETFs. It's, oil just continues to move higher. So we will look at that because that doesn't look safe anymore. So let's start off with the S&P. So here we go. This is in the morning. I'm recording this, but I think the story is clear. So on Friday, we broke down below this shorter term rising trend, dropped below the 200-day EMA. We were talking about how this was just going to get more and more ugly. And after that breakdown on Friday, we also now have the continuation of a breakdown from this more intermediate term rising trend. So not a good picture. Our indicators show a negative RSI. The RSI is not oversold, like you can see back here. So we have more to go. And you can see that the PMO is on a sell signal. It's now dropped below zero. It never really got into overbought territory or the top of its range, if you will. Usually for the S&P, the range for the PMO is -2 and +2. And we never got up to +2 before it turned back down. So that was another sign that things were not going the way we want. Now, there are a few things that maybe we can cling to, and that is the fact that sentiment is really getting bearish right now when you look at the VIX. I invert my scale on the VIX so that I can have oversold on the bottom and overbought on the top, because typically when you get these punctures of that lower band, you're going to get that reversal that you're looking for. Well, we had the puncture of that lower band on Friday. We obviously didn't see higher prices today. We're seeing sentiment get even more bearish as that VIX climbs in its reading. It's right now above 30. It's setting up like it could be a nice reversal area. But the problem is that when you look at the readings, just in comparison to these bear market lows that we were experiencing before those bear market rallies, we had multiple punctures, and really it took a while for price to react. But number two, notice how high they were. It was like close to 40 in the reading at one point. So this reading of 30, 31 is not really that oversold, if you will. It's really not. It's very bearish. The sentiment is very bearish, and it's contrarian. Usually when people get really bearish, you get a turn, but I'm just not seeing that setting up right now. Climax analysis gave us some really good hints on both last week on Thursday and on Tuesday. We had climax days. If you want to know more about what a climax day is, stay tuned, watch any of our Decision Point shows. You'll get a handle on what we call a climax day. But typically when we get these outside readings, we are looking for whether we've got a climax day, and if it's an upside initiation, exhaustion, downside initiation, exhaustion, that's what we're looking for. And you can see that back on Tuesday, we had a somewhat mild climax, although breadth was really above our threshold here, the net AD. So when we get these readings above our thresholds, that is a climax day. On Tuesday, because we had just turned up, we were looking at that as an upside initiation climax. Now, obviously, we ended up with with higher highs and lower lows, or I mean, higher lows, but we still finished the day negative. And that gave us a hint that if this climax isn't working out, we should be prepared for lower prices. So we got the next climax was a downside initiation climax. And that was, really set us up to have more downside action. Friday, of course, the bottom fell out as the 200-day was broken, and now we're seeing a continuation. There's still at least to 410 on the SPY I would be looking at before we can even start looking for a relief bounce, if you will. Let's look at the participation indexes. This is my bias chart. What we're looking at here is our Silver Cross and Golden Cross. Tells us Silver Cross how many stocks have a 20-day EMA above their 50. The Golden Cross tells us how many stocks have their 50 above their 200. So it's just a little bit more information than just price above their 20, price above their 50, price above their 200. So what we can see here is intermediate term. This is turned over, the Silver Cross. On Friday, we had a negative crossover on it. And the Golden Cross has been mostly flat, but we're probably going to see more deterioration as more stocks lose their 200-day EMA as support. These readings are from Friday, so they're bad, but I suspect that we're going to see even worse by the close today. We're going to see participation probably sink toward these oversold readings. We're not there yet. That was what I was kind of warning Carl and I on Friday in our subscriber weekly wrap. These are not oversold by any stretch of the imagination, especially when you look at it compared to those bear market lows. And with these percentages going lower to higher, that tells you that price is breaking down, because the first thing it breaks is the 20, then it breaks the 50, then it'll break the 200. So you can see that the deterioration is continuing, giving us a very bearish bias. Gold used to be the hideout for when we were having trouble with our markets. You could always count on gold to be that safe haven. Not so much. You can see Friday, we saw lower prices, broke the rising trend, and now we have gapped down on GLD and are already testing this area of support. Now, there is more support to be had at 175 here for GLD based on this gap right there and the tops that we had back in November. So if it doesn't hold this area, there's a good chance it might not. We should see it hold at 175. Although when I look at these indicators, it sure doesn't look like we're going to get a stop of this decline in gold anytime soon. So not the safe haven. Well, crude oil, right? Oil has been going up. Prices have been pretty much, as I said earlier, Teflon. Yes, there'd be a little bit of a consolidation, but ultimately you were seeing rising prices. Well, that ended. You can see that we had this symmetrical triangle on a flagpole. Okay, so that's a pennant really formation. And the expectation of a symmetrical triangle, it's continuation pattern. So we should get an upside breakout based on that prior trend. The prior trend should continue. That's not happening. We got a big gap down here on energy, on crude oil. Energy is the worst performing sector this week. Was the only one really besides consumer staples that was showing any kind of bullish participation, but now we're losing that. I would recommend you watch our Decision Point show this afternoon so that you can see where else we're getting damage and where there might be a hideout. At this point, I'm going to have to do some research before I start the Decision Point show to see if there's any area of the market where we can find some relief. Probably the only one I know just offhand has been the interest rate ETF. It's PFIX. It has been doing wonderfully because interest rates keep moving higher. All right. Well, before I leave, I do want to tell you more about decisionpoint.com. You can learn more about us on our website, but I have the Decision Point Alert. That's going to give you the charts you just saw, plus many more, and our analysis every day of those charts. And then I have Decision Point Diamonds, which goes pretty much hand in hand with those free Monday trading rooms. You can get you get 10 plus stock picks per week. And I have a subscriber only trading room on Fridays there. That's all I have. Again, Erin Swenlin from decisionpoint.com, wishing you good luck and good trading. Thanks so much for watching.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.